If you're looking at January Marin County single-family homes and you're thinking, hey, the numbers don't really agree with each other, well, you're not wrong. Today, I'm going to walk you through what's really going on with Marin single-family homes in January, why the charts look pretty messy, and what actually matters if you're buying or selling as we head into early 2026. So let's get to it. News to know. The bigger backdrop. Before we dive into Marin specifically, here's some interesting news that matters for the housing market. Mortgage rates have been relatively steady, but remain highly sensitive to economic signals. Just recently, the Federal Reserve held its benchmark rate at 350 to 375 after multiple cuts that they made in 2025. And that signals a cautious pause as inflation remains above target. As a result, the 30-year fixed mortgages have hovered in the low to mid 6% range, and the markets are watching closely for potential cuts later in 2026. Nationally, demand is showing strain. Home purchase cancellations hit a near decade high in December, with more than 16% of contracts terminated as affordability pressures and buyer selectivity increased. With that said, the Bay Area market, including Marin, well, we've been firmer than other places in the United States. On the rental side, United States apartment rents have slipped to 4-year lows. That's right, they are going down due to record supply and rising vacancies. You know, I even know a bunch of home sellers, they can't sell the house at the price they want, and so they rent it, which means there's more rentals available. Anyway, that has been happening while higher cost coastal markets like San Francisco and San Jose have remained more stable. So I'm sure we're more stable in rentals too. But still, it's happening here in Marin as well. Sellers that decide to rent instead. Anyway, all of this points to a market that is very rate sensitive, with softer demand nationally, but more resilience locally as we move into 2026. By the way, I'm Carrie Hill, lawyer turned realtor, 30-year Marin veteran, and the person who helps you buy or sell here with your sanity and your bank account intact. My information is in the link below if you need any backup. And hey, if you want my free newsletter that shows exactly which homes sold the prior month and whether they sold below or above ask, it's math nobody else is doing, that link is also in the description. And don't forget to subscribe. If you get just one little morsel of something that's helpful, it really helps me motivate to keep providing this content. Thank you so much. Quick context, all Marin homes. Before we zoom into single-family homes, we need to set the stage for what January data actually represents across all of Marin County. January sales numbers are not January's behavior, at least not some of the most important stuff, because it mostly reflects December's decisions. And December is the slowest, least representative month of the year. Buyers pull back, showings drop, and fewer contracts get written. Not because the market suddenly broke, but because people are busy with the holidays. At the same time, inventory and new listings are closer to real time. That's why January data often looks pretty contradictory. Sales down, inventory up, and headlines screaming, slow down, even when nothing structurally changed. Layer on the fact that mortgage rates drifted into the mid 6% range in late December, which tends to pull some buyers back off the sidelines. And you get mixed signals that are easy to misread. And finally, January almost always is a low volume month when sales are light. Even one high-end sale can ripple through the averages and make the market look stronger or weaker than what most buyers or sellers are actually experiencing. And we had that one whale buyer. Anyway, that's the backdrop. Now on to the charts. And here is January's inventory. These light green bars here, can't see that very well. Those are the numbers for inventories. The dark green ones are homes sold, and the little blue line here are new listings. Those are up. Not surprising. Those are more like in real time, right? It's happening right now. Unlike these green bars, which are the homes that sold, but these are December's activity shows up in the next month because the contracts are written then. And then you have the inventory number, which has increased from December to January, again, because that's like real-time numbers. And it's probably similar to last year if we look at the same thing. Yes, we had inventory up with sales down, reflecting the lag in the sales, and new listings up. For the quarter of looking at the sold homes, there were more homes sold at this quarter compared to this same quarter last year. They were up 4.7%. Looking at the whole quarter, new listings have not caught up with last year yet for here, which is unusual because listings had been really taken off last year. A lot more inventory in general. Oh, actually, wait a minute. I take that back. It's not necessarily that new listings are popping up. It's that the houses weren't selling, and so inventory was creeping up. So we'll see if that continues to happen. And when you do look at that kind of directly, this to that represents a 33.3% increase from last month to this month in those sales. And when you compare it to last year, it is up 10.3% over last year. So there's that much more homes available this January than there was last January. And here are days on market. We can see the increase from 68 to 70. Again, these are average days. So this is a little bit of a lag because it requires having enough data to come up with an average. So this 68 to 70 really reflects activity in December, not really January. And if you look at this last year, you'd see the same thing, right? This is really, says December, but it's really November activity. This is really mainly December activity. And so that's up. And so we'd expect that this days on market will decrease next month. And some of the more interesting things is probably these quarterly numbers here, in that the average days on market when you compare this quarter to the previous quarter is up 1.8%, which means the market's just, slightly weaker this time of the year than it was at this time last time of the year for a full quarter of data. And then we have this number here, which is the sales price over the original list price percentage. I don't really pay a lot of attention to this because this is really a better indicator of what sellers are doing, right? Are sellers, pricing correctly or not? And because their pricing correctly falls out in this original list price, it doesn't really tell us which way prices are going. It tells us more about what sellers are doing. And what they did do was that increased a little bit. So that differential month over month went up 1.1%, and it is unchanged when compared to last year for both the month and the quarter. So sellers haven't really changed much in these numbers than they did at this time last year. Okay, and we are on to prices. I'm always most interested in the median price here because it reflects usually more reality because the whales don't push it around so much. However, this month there was one whale and there were very few sales, so this may have pushed it more than usual. But in any event, it's still up. And however, when you look at the entire quarterly number, these and that for something that's more statistically relevant, then it's down 5.8%. So that's fairly significant. As far as the average number, well, the one that does get pushed around by the whales pretty consistently, so it's not as important when you look at the full quarterly numbers, so we can at least wipe out some of this, how unstatistically relevant most of these numbers are when we're looking at a single month. That shows that they were down 7.4%. So again, this includes a lot of whales on given months, so we never know exactly what it is, but generally the whales tend to push the numbers up, not down. So if we think this average number is even lower because it may have been pushed up by whales, then that's a pretty significant decline. And last we have the price per square foot. What do people get for their money? Well, from these two times, they got more for their money. They got more for their money by locking in a contract in December that is now showing up in this data. How much more? Well, those square footage prices were down 1.1%. However, when you compare it to the same time last year, they were up 11.7%. So there's that. And again, when you look at the more statistically relevant, the full quarter here, and wow, here, that was pretty large, right? Wow, we're really flattening out now that I look at all these 900s. We're nowhere near that. Anyway, full quarterly is numbered down 3.3% from this time last year for the full quarter, which means that people who bought got a bit more for their money. So January doesn't signal a crash or a surge. It pretty much signals noise. For buyers, this is a market where good homes still move, but you don't need to chase everything. Selection and pricing matter more than speed. For sellers, pricing accuracy is everything. Homes that are priced to sell are moving. Homes that aren't, well, they sit there. And if you're thinking about buying or selling Marin, there should be some other videos up here, popping up somewhere around now that should be helpful. Thank you for watching and have a great day.